This is Dan Zwicker, and today I'm going to talk to you about the tendency of November soybean futures, the overall average price pattern, which months show the most strength over the 12-month calendar year. First slide I'm going to take a look at here is the slide that shows November futures when they made their calendar year high, basically going all the way back to 1978 through last year, 2013. So this is a 36-year graph of when November soybean futures made their highs for the calendar year. It's not a marketing year high, it is a calendar year high. As you can see, down along the bottom here, I've broken the this graph into kind of three 4-month blocks. And the first block includes the month of January, February, March, and April, and 25% of your highs, or 1 out of 4 years, November soybeans makes their high during the first 4 months of the year. The middle 4 months of May, June, July, and August, over half the highs in November soybeans are posted during this 4-month period. And the last 4 months of the year, only about 22%, or again, about 1 in 5 years, you will post a high during the last 4 months of the year. Very similar to other commodities such as corn, the highs are made, these highs that are made during the first 4 months of the year are most likely the dynamics of the fundamentals of the market are such that we probably have adequate supplies of inventory around. Carry in or carry out stocks are fairly large. The trade is looking at average weather, a decent planting, large acreage numbers, and maybe the overall ending stocks levels look to build if we have generally favorable weather. So this is usually the years that one will have a high early in the calendar year. And you can kind of see going back in the 1985 was one of those years, 1982, and those were the early 80s when we were coming off of a very strong export demand market during the 70s. The dollar began to strengthen quite a bit in the early 80s, and we began to lose a lot of our export demand. So supplies basically were increasing during the early 80s, and this kind of shows you those highs that were made in 85 and some in 82 here. Then we had 1988 was an early high. That was a year I think Asia had a financial recession. We lost a lot of demand out of Asia. But for the most part, these are years that the trade feels very comfortable about supplies. They're probably years that South America has a big supply coming at us. So between a large U.S. supply and a large South American supply, markets have a tendency to top during the first 4 months of the year. The middle 4 months of the year is probably years that supplies are tightening. Carryover inventories are very snug, so the market worries about the current production levels for that growing season, of maybe not producing enough and maybe going into a rationing year. So you have a tendency then that the prices would strengthen during the summer months or when we're in the prime growing season. This would kind of start with plantings, how many acres we're going to plant, what kind of weather conditions we have at the start of the growing season, and then of course in soybeans the month of August, what kind of rain activity we get during July and August. So your middle 4 months are somewhat more of a common neutral type years. We have supplies, but we need to produce a big crop to meet demand, or otherwise we'd be in a situation where we may have to go into a rationing mode. So the markets have a tendency then to rally until the crop is somewhat made. As in corn, you can kind of see that soybeans also make a lot of highs during the month of June. They also make several May highs. You can kind of see several May highs where there's been 4 highs posted in May during the past 36 years, but we've got like 8 highs posted during the month of June. July, we've got about like 4 highs, and then of course we've got about 3 highs posted here during the month of August. And 2013 was one of those years when soybeans got into, we had a drier August, and the market was worried about overall yield prospects during 2013. So you got about half the highs made during that last, during the middle 4 months. The last 4 months are basically, these are highs basically coming from a short crop. The rains didn't come, plantings were short, weather conditions were adverse, overall yields came down, so production levels came down to the point where we had to ration inventory. Again, it was kind of like a short crop, peaks early in the marketing year and then has a long tail. So those are years when you have a weather-driven market and a much smaller crop production. Again, as you could use this tool as a marketing plan, very similar to other commodities. One would probably want to have at least 25% of your new crop soybeans priced during the first 4 months of the year. If planting goes well and your crop looks good, you begin to increase that sales level during the month of May, June, and July, and probably by the first part of August, if your crop looks pretty good, you can maybe take your sales on up to about 75% or so. Then you would maybe hold 25% of your crop for a post-harvest recovery rally, or maybe hold the crop all the way into maybe next spring for a spring rally or a South American weather scare. That would be one way you could kind of look at this chart and kind of pencil out a marketing plan. The next chart I'm showing you here is a 30-year average price of November soybean futures. So you can kind of see that for the most part, I'm going to start here at the end of the graph. Soybeans have a strong tendency to make an October low. Then they have a rally during late October and November, but then they'll come back and kind of soften up as you go into Thanksgiving and the first part of December. But once those lows are in place, then you have a very strong seasonal tendency of soybeans to strengthen into January and then steadily grind higher as you go into the month of June. Remember, June is the month that has the most highs of November soybean futures. Then you kind of get into more of probably weather conditions. The market gets choppy. But once those June, July rains kind of come, the market has a strong seasonal tendency then to drop into a late July, early August low, very similar to the corn market, getting braced up for a crop report, especially if weather has been favorable. The market anticipates that we'll have a fairly large August crop report. Then once that August crop report is done, usually that decline is overdone. So then the market kind of has a recovery rally or a pre-harvest rally kind of into that Labor Day period. But once the combines begin to roll, you have a very steep seasonal decline during the last 2.5 weeks of September on into that first week of August. So this is a general overall pattern of the market when you look at it from an average basis. So the market, since most of the highs, 50% of the highs are made during the middle 4 months of the year, that's what shows up here. The early season highs, 1 out of 4 or 1 out of 5, just doesn't really show up on the overall graph. This is a percentage change graph from November 1st. So this is what prices do from a percentage change, whatever the price was on November 1st. As we climb higher, you have a tendency of an 8% price increase from November 1st price levels, and then once you have your seasonal high, you'll have upwards of an 8 to 9% maybe decline in prices from the summer high down into an August low. That's pretty much all I have here for today. If you have any questions about these charts, feel free to give me a call, or again, talk to one of your CGB grain merchants at your local location. They will be able to help you out and help give you a little further explanation of these seasonal tendencies and how one might be able to use these charts in incorporating a marketing plan for the coming year. Thank you for listening.